Happy Market Monday. Over the next weeks, months, and possibly years, I want to talk to you about stocks and the stocks I own, my favorite stocks. But before I start going down that road, I wanted to spend the first Market Monday talking about why I actually invest in stocks and why I think you should too. And maybe you're already a stock investor and you're here just to, confirmation bias or just to, get another opinion. Or maybe you've never even invested in stocks and you're curious and you checked out this video just because you wanted to see, hey, what's all this stuff about? So the first reason is that stocks have historically outperformed all of the major asset classes. So it should be fairly obvious that stocks outperform bonds and bonds outperform cash. This is historical over time, and it makes sense. Stocks are the riskiest of those three asset classes, whereas bonds, and by bonds we're talking about fixed income instruments issued from companies, government too, but companies for the most part. And the third category is cash, and I don't mean cash under the pillow. I mean cash in a bank, in either FDIC insured savings account, checking account that's generating interest in long or short-term CDs, or through the money market funds that these days cash seems pretty good. You can generate better than 5% for some of the best money market funds out there. But historically over time, it's been a laggard to bonds, and bonds have been a laggard to stocks. And of course, you're thinking, well, wait, that's just three asset classes. What about, let's say, real estate? Well, of course, real estate the last couple of years has been superb, great returns. But again, historically, not so much. It's definitely not compared to stocks. And again, there's obviously risks with real estate, risks with stocks. They have advantages of one or the other. Maybe I'll tackle that in a future Market Monday. But I mean, historical returns, they haven't. And you could talk about crypto or options trading, commodities. Again, this is talking about specific these asset classes. Crypto, again, and I have nothing against crypto. I've been a crypto investor for a couple of years, not a very major part in any way of my portfolio, and I've seen the highs and lows, but to me, I prefer stocks. That's where I could concentrate most of my portfolio. The same thing with commodities and options tradings, where it's a bit too risky for my taste. Well, some options trading is the opposite of risky, but maybe we'll get that into another Market Monday. But again, historically speaking, over real estate, over bonds, over cash, stocks are superior. Crypto has had a hotter start since its launch, since Bitcoin launched now, but obviously a lot of stuff have fallen out. A lot of people in brokerage accounts, holding accounts have fallen, lost practically everything. A lot of things have happened that have gone wrong. So I'm not going to talk about crypto necessarily, but again, that's still a very short window of time. I'm talking about historical, something that's been around for several decades at these asset classes. So that's number one. Number two, it's easy to get excited about companies. So the same passion that you get when you size up your fantasy football draft, or you're watching Survivor or American Idol and telling yourselves, all right, between friends, all right, this is who I think is going to win and why. That same analysis that you can get passionate about applies to investing, because odds are, if there's something you are either something you're passionate about, whether it's a hobby or a line of work, something that you were excited about, there are probably one, if not several, if not a dozen publicly traded companies that are in this universe, stuff that you know a lot about. And there's a good chance, again, if this is something you're passionate about, that you know more about this company and the industry, possibly than some of the people that are, financial analysts, or even people that are actually putting money to work investing in these companies, which gives you an advantage. So to me, this is something that you can get excited about. Companies have stories to tell. It's not a piece of paper, virtual or otherwise, as a stock certificate would be. It is actual real stories and real developments, and every 3 months you're going to hear them provide their latest results, tell you what they think about the future, give you a prognosis. And again, if you are passionate about the industry, passionate about these companies that you invest in, you will probably know exactly what they're going to say and exactly where they're heading before most people do. And that's the key to successful investing, is to stay a step ahead of the market. And that is one thing that happens when you're passionate about companies that you invest in. So that's number two. Again, very easy to get excited about companies, especially companies and businesses that excite you. Number three, it's cheap to get started. So when I started investing back in the 1990s, late 1980s, early 1990s is when I got serious about investing, just fresh out of college. And at the time, to buy a stock, even the cheapest discount broker, the largest discount broker, was $35 a trade. And again, most people starting off, they're not throwing tens of thousands of dollars or even thousands of dollars. Sometimes it's a very small amount, and $35 would eat up a lot of that. And there's the bid and the ask spread, the difference between when you buy and when you sell, and then you'd have to pay the same brokerage commission on the way out. So clearly, in the past, it was very hard to be an investor, especially a young investor, early investor, or an investor, even an older investor, but one that did not have a lot of money to put to work in the market. That's not true anymore. When Robinhood arrived a couple years ago, they pretty much upended the market with zero commission trading. And of course, they make their money in other ways, but in terms of this, it was something that all the other major discount brokerages and even some of the major traditional brokerages or banks rolled out these kind of like commission-free brokerage to keep up with everybody else. So there's a lot of platforms out there where it's zero commission, so you can buy the smallest position and not have to worry about it. So it's cheap to get started. That's number 3. Number 4, the power of compounding. So this is everything in investing, especially when you're picking a superior asset class like stocks. So let's say you have $1,000 to invest, and it's going to generate 5% a year over 40 years. You may think, well, okay, 5%, you start working it, but again, it's 5%, and then it's 1,050. That gets 5% the second year. So it actually, the degree year by year, that's the compounding what happens. The 5% year over year over a larger base gets larger and larger. In this case, if you had $1,000, 40 years later, you'd have a little more than $7,000. And that may not seem very exciting, but then we get to an investment that's generating 10% annual returns, 10% compounded annual rate. So $1,000 invested in something that's generating 10% in 40 years is not worth $14,000. You may think, well, 7,000, 5%, 10% would be 14,000. No, that's not how compounding works. If it's 40 years, of something at 10% will be close to $54,000 versus $7,000. So it's a very big difference. And of course, obviously, this is just talking about the initial investment. This is why they always say invest as young as you can, as early as you can, right when you start working, right when you have the ability, you have somebody saved up to do that, go do that. Because over time, the earlier you start, the greater you're going to get this exponential at compounding that makes investing so wealth altering. The fact that you'll be able to enjoy things in life that other people that were maybe making the same amount of money at work in a similar kind of situation are not in the same financial situation years down the line because you chose the higher product, the higher compounding product over time, historically speaking. The fifth and the final reason is that investing, I think it makes you a better person, which I know is not the right thing to say, so I'm not going to use that. I'm just going to say that investing leads you to make better financial decisions. So let's start from the very beginning. Once you start investing, it's almost as if like when you were, let's say, passionate about either maybe collecting trading cards or buying shoes. Once you have that passion for something that involves laying out money for something, you start to make better financial decisions as far as how you can save up for that. And I'm not saying that trading cards and shoes and all these things, they don't have compounding value for the most part, but something you're passionate about and you're spending, you're going to save to get there. And if you take that same approach with stocks, you'll find how great things can be, because it becomes a matter of living beneath your means. And you think, well, hey, maybe we shouldn't go out to that restaurant this time. Maybe we can cook, or maybe go to a cheaper restaurant, or maybe I can, hey, you know what, if I saved $40, $50, if I got my haircut at this place versus that place, or and I'm not going to do the Starbucks argument, if $5 a day saved, but it is true that you make small decisions over the course of everything you do, budgeting decisions, not sacrificing the joys and the pleasures that everyone is rightfully entitled to. No one's going to say, hey, you can't have a soft drink because it costs 40, 50 cents a can. I'm talking about real decisions where over time you're making more money because you're saving more, because you want to save more, you're excited about it. And I think everyone's gone through that. They're planning to go on this trip next year, and they start putting money away for that. And it's not just a matter of putting money away for it because you don't want to borrow that money to go with. You actually start making sacrifices. And these are sacrifices that you make for your impulse purchases, for your long-term purchases. They may as well be sacrifices you make to invest, to put money in investing. That is, you start living beneath your means intrinsically when you realize that the more money I can put into the market now, the better off I'll be 5, 10, 15 years from now if I wouldn't have put that money in there. And of course, another thing that makes you believe better financial decisions is as an investor, you're looking at businesses. You see what these million, billion, and these days it's a couple trillion dollar market cap companies are doing with their businesses. You understand what they're making, the decisions they're making, and all these things can be applied to your own personal thinking too. Of course, you're not going to be running a company. You're not going to be laying off your kids. You're not going to be, hiring, outsource work and just come in and have everything done for you kind of thing, like a company would. But you are in a position where you're making better financial decisions because you know how businesses work, because you're following them, because you have money invested in them, because you want to track their success. And you get to learn things. This works, that doesn't work. It's not just a matter of having a conversation. Next time you run into someone that actually has a passion for stocks and you can say, hey, we can talk about something we have in common. Knowing these things makes you a better person as far as financial management. Companies have to balance their sheets. They have to balance their sheets. They have to balance their income statements, and everything has to add up. Same thing with you with your balancing your checkbook at the end of every day, making sure that your credit card bills are coming in and you're paying them off and not letting the compounding of high interest rates on credit card debt go by. All these things are part of the stuff that, as an investor, you look at things through a different lens, and it does help you make better financial decisions. So this is probably a longer video. I assure you it'll be a longer video than most of the other videos I'll put up on this. But again, the next few weeks, I'm going to look at some of my favorite stocks. These are stocks that I actually own, not stocks that have any interest in no banking interest, nothing that I'm, no agenda, just stocks that, again, there's thousands and thousands of stocks out there. I'm going to go over the ones that I own, as with the time that I own them and why I own them. But before I do that, I just wanted to let this video out there to tell you why stocks in the first place. And so, hope you enjoy the first Market Monday. Subscribe, click the bell or whatever YouTube is doing the days that you're actually watching this video to make sure that you get alerted when I have new videos, because we're going to get to some stocks soon. And that is all. Thank you again for Market Monday. You made it happen. Let's go.